Right. Hi, everyone. Good morning. This is Niyati. I am a co founder and I lead the AI at Hyperbots. With me, it's a privilege to have Dr. Michael Wellman with us today. Uh, Good morning, Dr. Wellman.
Yes, hello. Nice to be here.
Yeah, and this is one of our first technical chats that we are starting off around AI and the potential use of AI in finance. So, with Dr. Wellman, we are going to go deeper into a discussion about AI for financial markets, especially talk about the role of AI in the context of, say, new age or generative AI. And I would like just dive right in. So instead of me introducing Dr. Wellman, who in fact is a professor at University of Michigan right now, Dr. Wellman, why don't you tell us about your journey? How did you end up working on AI and finance? And I do know you started off at a ERP company, and now you are at Michigan. So how did you land here?
So actually, I started working on artificial intelligence quite a long time ago. I guess I was a graduate student 40 years ago. So I've been working in artificial intelligence my whole career. In fact, I joined the University of Michigan in 1992,
Wow.
and a lot of my research was then about the intersection of AI and economics and connecting multi-agent systems and economic thinking about those. Well, shortly in those early 90s, the World Wide Web came along. And it turned out that whatever you were doing, you would do on the web. So we were doing auctions and markets using computational markets. So we got very much involved in the emerging e-commerce world at that time because we were
Mhm.
kinds of platforms. And my entry into that ERP world that you mentioned came because I was involved in a startup company that did auction technology and was later acquired by Ariba and then ultimately SAP for those platforms. So we've been working on economics and electronic commerce for a very long time. And even though, of course, one of the most important economic domains is the financial world, we kind of purposefully avoided that for a while because it's a very secretive world that has a lot of power, lot of horsepower in it. And we didn't think we were going to beat the market, and that wasn't really our goal in trying to do that. So we stayed away from finance. But about 15 years ago or so, we started seeing algorithmic trading and something called flash trading and some various scandals around that making the news, and decided really that it was time for my research group to look at this domain. And, it was really important for computer scientists to try to help understand what are the implications of algorithms now playing a role in financial markets. So that's
And,
really been.
and this is still pre-generative AI world, right? So this is still
So we're talking about 15 years ago or so, 2008, 2009. Of course, another thing that happened around then was we had a major financial crisis,
mhm.
and trying to understand the potential for how algorithms could affect financial stability and the effect of how the financial markets may affect the economy and the world seemed very salient. And so it was a very rich domain to get into. But even though it was before ChatGPT and the things that make everybody aware now, it was clear that algorithms and using some AI techniques,
Mhm.
were being adopted in financial markets. And you could say that, uh, in fact, finance has been an early adopter of AI.
Mhm.
Using machine learning for credit verification and even helping in loan decision making has been going on for quite a long time. And in financial markets, using algorithms to assist in trade or even to execute trades, happened pretty early on. And it's hard
Mhm.
to quantify exactly when and how much it penetrated, but it ultimately became what I would call one of the first, or maybe not one of the first, the first major application of autonomous agents. That is,
Got
AI programs that are operating in important high stakes environments without human intervention.
Mhm.
And the reason that markets are became that is, of course, because a big part of the advantage of algorithms is how fast they can respond to information. And so using that advantage precludes having humans in the loop. So I think it's very interesting that it emerged as one of the probably most important case studies for how AI could be out in the world.
Got it. And here I believe both accuracy and efficiency, as well as kind of security, were extremely critical, right?
Well, the thing about financial trading is that there's a bottom line, and
Mm-hmm.
you can identify these various features you want to have, but the ultimate thing is your algorithm implementing a strategy that is profitable. And so, of course, the strategies are based on making predictions in some case. So predictive accuracy is going to be an important ingredient. It doesn't mean that you have to be 99% accurate in financial trading. If you have an algorithm that is reliably 55% accurate, you can make unbounded amounts of money, right? So, uh, uh, but no doubt, many of the practitioners of algorithmic trading, they use a lot of mathematical techniques, but certainly included the whole toolbox of machine learning, as part of that.
Got it. And let's say come Gen AI and LLMs. What is it that you saw as a excuse me, as a paramount shift? Like, what is it that these models suddenly did that it has become a buzz and extremely exciting?
Okay, if I can just get to that by stepping back first a bit. So, even just simply the existence of algorithms on financial markets could qualitatively change things compared to, just human traders. As I
Mhm.
mentioned, the speed of response changes things qualitatively. The amount of information that can be processed at once, the ability to take actions in multiple markets at once,
Mhm.
the ability to promulgate new strategies that you discover to a lot of different places. That already, led to a lot of new kinds of strategies that maybe didn't exist before. And so a lot of questions about how to understand the role of algorithms in financial markets. So now to get into your question. So what has changed, if anything, about
Mhm.
the latest round of AI? And I would say there's really two categories of that I would define. One is large language models or foundation models, or basically big pre-trained neural network kinds of models, like you mentioned. The other, which maybe came around a little bit earlier, but I think is still one of the major new techniques in AI, is deep reinforcement learning.
Yeah.
Uh, Techniques that um, can learn strategies for acting from experience data.
Got it.
So what deep reinforcement learning lets you do is to further the automation of algorithms trading in markets, because you could actually don't need anyone to program the algorithm directly. You basically can have a reinforcement learning process that derives a trading strategy automatically, and could then even be something that uh, the developers don't even really understand how it works, what
Mhm.
it's doing. Of course, they can test whether it works and monitor it, but you can automatically generate these strategies. So that provides really a new degree of autonomy beyond even putting an algorithm out there and letting it trade. Now you can even put something out there, let it derive an algorithm that will then trade.
And here all of that is data driven, or does that include kind of human feedback being incorporated in some form, or is it more like, at least in the world of financial markets, is it more of just based on time series or on the data, learn on the data, learn those RL agents, those algorithms, and then do a feedback loop, or there is a human in the loop somewhere?
So the most straightforward thing, of course, is to use just the experience time series that the algorithm has by trading in the market. That is all of the um, market data that one gets, and and experience the feedback from taking actions in the markets, not necessarily any other inputs. But of course, if there are other streams of information that may be guided by humans, those could be incorporated as well.
Got it.
So this has in common something with, I mean, again, stepping back a bit, another reason that financial trading became an important domain for autonomous AI is because it was really easy to automate trading, right? You have electronic markets that have very simple, well-defined interfaces and computer feeds. And so you didn't have to consider a very big scope of actions. It was just, what orders do I want to submit at what price, at what time? Pretty simple interface. Well, what the latest wave of generative AI and large language models in particular let you do is it let you interact with a lot of things where you hadn't defined a narrow interface ahead of time, because it opens up really the language channel. So if you have the ability to interact in language, you don't have to necessarily customize your input and output to fit a certain API. You can basically have your bot call a dealer on the phone and negotiate a price for a bond. In principle, obviously that's not an easy thing to do very reliably, but one could even think about doing that, with this latest technology, whereas that would have been a wild dream just a few years ago.
Got it. And do you see, so I do see a point of kind of language becoming an extremely easy interface and blurring boundaries in terms of I don't need to define what I'm going to ask the model or the data. But do you see practical challenges when you are especially dealing with finance, accounting, or math data when it comes to these kind of models? Because at least in kind of what we are seeing when we do experiments, these models significantly still struggle to understand math or numbers. So, like, what are the challenges you are seeing there? How are we going to mitigate all of it?
Yeah, so of course, one way you could use these capabilities is to wrap it around an existing algorithm, right? So I might have a core trading algorithm that is not based on an LLM, right? But I now want it to interface with a person by using language, right? You could design that program that just uses the LLM as the front end, basically for to open up more the interface to more places. So this also just increases the level of automation, because you could take your algorithm to places that you hadn't been able to take it before, because you now work through things like language interfaces.
Got it. So your entry gate is likely language through an LLM, and you would still need some significant modeling or algorithms for it to start understanding the domain and the data, or tie back to the data.
That's right. Now, it may also be possible to take advantage of this new technology that gave us LLMs, transformer models, and just just these massive pre-trained models of various kinds, things that are more generally called foundation models, and try to develop those particularly for trading domains, or some financial, applications. And, the financial trading world is very secretive, but I'd be very surprised if there weren't a lot of resources being devoted to trying this out by some major trading firms and hedge funds right now.
Technically, what do you see as the key differentiation in building a foundational model for finance or trading, like as against the ChatGPTs of the world?
So when you're building a foundation model for a particular domain, obviously you're curating the kind of data in a very different way than when you're just trying to feed in sort of your general, the kitchen sink of everything that you could find. So I'm also not pretending that I would necessarily know how to do it. But like I said, and of course, sitting in the university, we don't have the resources to train massive models of any kind. We could train smaller models. So I just think it would be, I'm hoping that we'll find out in short order what people have been trying. Although, like I said, often some big projects, some big efforts can remain secret indefinitely.
Yeah.
If they work, you don't want to tell anybody about it, because then you squandered your big advantage. You don't publish papers about your big successful efforts in this world. Work, then of course also you don't want to tell anybody about it. So either way, a lot of the knowledge that's come from this experimentation, which I'm hypothesizing is happening, will never see the light of day.
Makes sense. So maybe a little bit of a tangential question here. So finance as a world does come with a lot of regulations, both on the market side of things as well as corporate finance, right? So you will have regulations, you will have contracts, you will have maybe terms and conditions which are going to define all processes associated with that enterprise or with that, let's say, market as an entity. How, where do you see generative AI, especially agent, if positioned with as a agentic behavior, contribute towards maybe either improving regulations or building these regulations, interpreting them? Like, where do you see it fit? I do know I've seen some of your work around that recently. So.
No, it's a very good question. Well, I'm not sure exactly what the shape of regulation would be. I have certainly expressed opinions about certain issues that we should, be concerned about with trading, like market manipulation, and maybe the particular issue about how AI can sometimes create loopholes, that you could find some behavior that would be illegal if a person did it, but somehow if you get a machine to do it, it gets around the rules. So I think we need to try to close a lot of those loopholes. But what I do think is that people are trying to think about how to regulate AI in all areas of our economy and our society. But the financial world, as you mentioned, already is highly regulated. There's a lot of regulatory infrastructure. The kind of companies that would deploy this technology already have big compliance departments, and they already expect to follow rules. So it may be possible. It may be the case that the financial sector is going to lead the way in how to regulate AI. That doesn't mean that it'll be easy to regulate, or that the regulations, the lawmakers will get things right on the first try, but it may be the first place where you could even try to come up with sensible regulations.
So if I look at it from, let's say, an individual trying to interact with the market, so there's a question around what are the ethical considerations surrounding the use of AI in portfolio management, especially maybe regarding biases, right? So potential biases in algorithms and their impacts on investment decisions. So when I look at kind of the consumer or the individual side of the market, this is a question we just got from the audience. How would you address that?
Okay, well, okay, yes, excellent question. So there's a lot of ethical considerations. Now, I've been mostly thinking about things like algorithmic trading, where we have considerations about how can you make sure your algorithms are not doing nefarious things like manipulate the market or colluding, maybe even unintentionally. How you're doing those kinds of things. How can you evaluate your algorithms? And I think the answers to that will be simpler. It will be analogous to how do I avoid unintended biases in how I'm making decisions, say, about lending. That's usually where a lot of the personal discrimination kind of questions, come in. This too, I think, is an area that is where finance is going to lead the way in regulation. And obviously, there's already a lot of fairness in lending laws and regulatory structures. I'm somewhat familiar with the United States, but throughout the world, there are other different kinds of systems. There's new questions about how those apply to algorithmic decisions, right? Or is it possible that algorithmic decisions get around the rules that exist now, but we have to create new ones? But even aside from the legal questions, there's questions from the standpoint of a company that wants to use these models, and they don't themselves want to discriminate, regardless of what the law says. How could you even tell what they're doing? I think we have a real need for third-party kind of tools and infrastructure to help validate models, to certify that they are free from at least certain kinds of biases that we can enumerate, and maybe obey other kinds of properties. I'm hoping that some of these tools will emerge naturally from the market,
Got it.
as there is a need for them. No doubt, government regulation could help drive that market into existence, because of the way compliance works. But either way, I think we need to focus on that kind of new evaluation and certification software for AI systems.
Got it. So mostly a curiosity question. So when I take the same analogy that you gave right now about using AI to either validate algorithmic outputs or come up with new regulations to ensure that there are no biases, in the corporate finance world, where your kind of entity or identity is the enterprise or is the set of organizations for whom or where a particular set of AI models or techniques are deployed, can the ERP or the structured data that already sits in the world of that organization act towards binding AI or kind of grounding AI to some extent?
I think I need a little clarification. What do you mean by binding?
So let's say I have in the markets world, we'll have algorithms, and we are going to try to ground the output of an algorithm to do two things, right? One is correct for the biases, and second is ensure that the algorithm follows the right data trend in some way, and you don't want it to go bizarre uh, from the lending or money management perspective. Now, when I move this to the enterprise finance world or the corporate finance world, there my ground truth is the data that sits in my ERP or sits in my database about my vendors, my cash outflow, my credit lines, my um, capital, where is the money coming from, where is the money going out. So do you see these kind of algorithms or validation agents learning from that ground truth? Because it's a closed world in from a AI technology perspective, right?
Yeah, I see it. No, it's a very good question. I think that we'll see some combination of third-party tools that maybe have their own means of grounding
Got it.
things, but I think you're right that may be hard to do in the abstract for a lot of things, and you have to make your certifications relative to some assumptions that are some representations that are made on the part of the entity. Now, as long as that's understood, that could be workable. I mean, that's also, of course, how auditing works, right?
Mhm.
That, you still have to, the auditor is only certifying something conditional on the fact that its information was given was correct or accurate or truthful or in itself.
Got it. Yeah, I pretty much agree that I think we may have auditing agents of some sort, both like on the market side as well as on the enterprise finance side of things. Maybe going back to the LLM, let's say call it the wave or the hype or however we may perceive it. What is going to be the limitation? Like, where is this going to stop? Like, and where do you think, as a computer scientist, um, ethically we would need to stop in the context of finance?
So, as an AI, as an AI person who's been around for a long time, I guess what I'll say is that AI will often surprise us. The emergence of these tools in just a couple of years ago really surprised us. I mean, even people who are experts in the field, maybe they knew the technology, but I think that the breadth of capability that was that came out was not anticipated. That was a positive surprise. We often also have negative surprises where things that were new ceilings of capabilities, new limitations, come in that we didn't, roadblocks that we didn't realize. So I'm going to be, I'm not going to venture claim that I know where the next roadblock is or where the next positive surprise will be. So I think the prudent thing is to plan for assuming that these capabilities will play out and provide a lot of value. No doubt people are going to try and have been trying a lot of things that didn't really work out as they expected. But it really is early days. I don't think we're anywhere close to exploiting even the stuff that we're it's pretty obvious can be done. And of course, that it's reasonably expected that the capabilities will be increasing over time.
Makes sense. Yeah. Thanks for that. So what we do have a few audience questions. So I'll just take some of them now.
Sure.
Question from Sankalp around how can regulatory frameworks adapt to the increasing use of AI in financial markets, and then essentially, obviously, addressing concerns around transparency, accountability, systematic risks, all of that, right? So you addressed it at a very high level, maybe little more details around that.
Yes, no, very, very good question. I think the accountability is key. So we may need to require some more clear definitions of ownership. When an algorithm is applying, that it's traceable who's on whose behalf they're acting. Maybe even disclosure in some cases to other parties that this is the kind of algorithm that's operating. In terms of systemic effects, that is, of course, the really most important question in financial regulation. We care about things being fair and no one's cheating here and there, but the real risks involve things that could induce major crashes or other dislocations. And I think there is something that we really need is a lot more research. Now, maybe that's the least surprising thing for a professor to say, is that we need to do more research and to understand. But I think the kinds of qualitative phenomena that could come out of the interaction of AIs are not really well understood. Certainly not as understood as they need to be.
Yeah. So essentially, as researchers, we'll always have a job and a lot to do in this space. So, and I do see that data kind of makes it extremely enticing to work in this space because there's lots of data as well, right? So there's a question more from a perspective of let's say all this AI comes into the world, especially for financial analysis. So what are the implications of AI-driven financial analysis for job displacement, and what do you think are the skills required for future finance professionals? Is it going to be a complete replacement? How is this? What is the synergy between that professional and their finance AI?
So again, this is predicting the future is hazardous here, and but I think it is a reasonably good bet that at least in the short run to the intermediate term, what we are mostly going to be seeing from this kind of AI is complementarity and amplification of human skills. I've heard the phrase that we're entering, the golden age of complementarity. That there's some things that humans, do well, and now with these much more powerful tools, they can do much more. Now, these kinds of relationships do evolve over time. I like to use the example of the game of chess, which of course is right now trivial, but of course, if you go back far enough, the best chess players were human beings. And then since Deep Blue beat Garry Kasparov, the best computer player was a computer. But there was a period right around then where even better than a computer or a person were a computer and a person working together.
Yeah.
Human computer teams could beat the best computer and they could beat the best person. Well, over time, that started to change a little bit, and it lasted for maybe about 15 years or so, until at some point, in the human computer team, the human is not really adding much. And it's really the computer doing it all. And so that now there's not really much in a human computer team for chess. In Go, it may have even happened faster that
Yeah.
that there's no things. But of course, different kinds of tasks and skills are going to play out in different timescales. But I am, as a longtime AI researcher, I do believe there's no ultimate limits to AI, and ultimately AI will be able to do pretty much anything that people can do better. And so we are going to hopefully use this time when we are in this golden age of complementarity to also think really deeply about our future and how we're going to work along with machines that are even more capable than us.
Do you see AI starting to take over strategy, especially from kind of a finance perspective, or do you see that being a limit beyond which that AI is going to give me the data, AI is going to give me the reports, AI is going to give me the insights, maybe give me recommendations for strategy and kind of key decisions, especially because we are talking about money, right? So money coming in, money going out, or do you see AI kind of doing that for humans too?
So I don't see any ultimate limits. I think certainly right now there are limits. I think the limits are much farther along than they were 5 years ago, 10 years ago, 20 years ago. Again, in retrospect, uh, it may have seemed surprising at the time if I had told you that the first applications of autonomous agents will be in financial markets. You say that's crazy. That's you could lose. You're going to connect a machine to your bank account and maybe lose all your money. And of course, that has happened a few times to some companies. But as they got experience with it and found it worked, they trusted it more and more and made the monitoring, at more of an arm's length and further along. So certainly, any algorithmic trading systems are heavily monitored by people, but people with tools, and of course, how involved the people are, sort of gets farther and further away over time.
Got it. And in the same context, there's a question which talks about how can the integration of AI and financial forecasting be balanced, right? So we are talking about that there is a need from the human, and there is the decision making that at some point will cannot be just machine driven. So how can we mitigate unintended consequences in this space?
Yes. So unintended consequences is kind of the ultimate question about AI risks, right? How can we ever be sure of that? So I think across the board in AI, we need better ways of expressing the consequences that we intend. And find ways to monitor. So I think what we're going to ultimately build are better and better AI tools to help monitor the other AIs. Now we realize, though, of course, that's still now just a bigger AI. So we have to accept that this supervision sort of gets more and more indirect and distant as the technology gets more capable. That can also lead to big risks. I don't think there's any kind of silver bullet that gets rid of that risk. So that's why I think it is something that we really do need to put a lot of energy and investment into building safety systems for AIs.
Makes sense. And I think, especially when we talk about, say, enterprise software or software that is going to be deployed with significant embedded AI, native AI in there, I do believe that maybe traditional algorithms and some math may help us do these kind of risk management. It,
Yeah.
it cannot be just free flowing AI, right?
Yeah,
So,
but I think what I want to convey is it can sometimes be a kind of a crutch to say, oh, well, we'll keep humans in the loop or we'll keep humans around, because ultimately the humans get overwhelmed and they can't really right, and ultimately they become too expensive and somebody takes them out. So it's that can't be what we're going to be depending on so much. We have to just come up with better and better system solutions for safety.
got it. So we need our systems to be kind of self-reliant or secure in a way that they learn, they heal, all of that on their own. Yeah.
Right. We have to accept that they're going to have autonomy, right?
Mhm.
More and more, and how to manage that in the safest way is the question.
Yeah, absolutely. I very much resonate with that view, actually. That these things are going to learn on their own. They are going to work by themselves. We just need to ensure that they don't harm the outputs that we are looking for, right? As the user. Uh, Maybe I'll take one last question, which is around it's a little bit of a different shift to this finance and AI. So the question is around how can AI be leveraged to enhance financial literacy and empower an individual, so individual investors to make more informed decisions. Where do you see that space evolve?
Yeah, no, that's a very interesting question. I mean, but it's almost like sort of the AI, the hope that many people have that AI will also be very helpful for education, right? Financial literacy is just another kind of education. In some ways, having automated tools makes it less necessary to know a lot of details about, how certain things work and so on. But it doesn't lessen the need for people to really understand the fundamentals of
Mhm.
uh, what investment is and why, and yeah, if they're going to be empowered to make certain decisions, and they want to understand, be able to tell the difference between investing in certain kinds of assets or cryptocurrency. We really do want people to understand the basis for uh, investment, which is value for future returns.
Yeah, makes sense. So maybe to close, as someone who has seen these waves of AI, right, and pretty much all of them, and actually even narrowly looked at it from the perspective of finance, just because of your tenure through this work, uh, what excites you the most in terms of potential of AI and finance together?
Well, any time you see transformational change, it's exciting as well as maybe scary.
Mhm.
But what excites me, of course, is just being, in the front row and seeing what some of these effects are and trying to help influence them in the more beneficial direction. So how it's going to play out, I'm both excited, but also feel there's a lot of interesting uncertainty that's going to get resolved in the coming years.
Yep, I agree. So thanks for this chat and extremely insightful. So because we ended up talking about just finance AI markets, then maybe talking about a couple of small use cases and pretty much addressing key concerns around maybe risks, ethics, where are the boundaries, how is going to use help individuals, how are we going to control the kind of challenges. So short, brief, but extremely insightful. So thanks for this chat. I mean, it was amazing sitting here and just discussing it.
My pleasure. Thank you.
All right. Bye. Thanks for all the audience who joined in, and looking forward to many more such discussions. Bye, Dr. Wellman. Thank you.